Hi, I'm Jason Yarusi of Yarusi Holdings, and this is your weekly webinar. So each week we come in and we talk all about multifamily. We bring you a topic of focus each and every week. And if you want to be updated each and every time when we have a new webinar available, make sure you go down there and hit that follow button. So I'm Jason Yarusi of Yarusi Holdings. We're a multifamily investment firm here in Middle Tennessee. And today we are talking about market cycles and timing investments. Now, there's this paradigm here where we're in a market cycle. And we hear the noise, whether it be that the market's very hot or that we're moving into a recession, and we get stuck in a mindset, into a narrative that now is not the right time. Right? How many times have you asked and said, oh, the market's really hot, so I'm going to wait for it to cool down. And now when we're in some kind of cool down, oh, I'm going to wait for the market to bottom out. And you'll find that you never actually get active into investing here because you're constantly waiting for that moment. However, we never have the inherent knowledge to understand when are we at the top of the market, when are we at the bottom of the market. So the ideal impact is for us to really focus on being niche with our investments. Now, when we hear the word recession, right, we hear it thrown around a lot. It's not like the entire U.S. just reacts and that everybody's in a recession. Each market acts very different and very independently of each other. They're all going to be impacted in different ways. Some that now are pushing into a recession are now on the other side of other markets that are just finding their way into their part of oversupply or their part of expansion, right? So each and every market is going to react differently. So the more you can be fluid with your market to understand where are you, right? What are the limitations of my market? What are the upside of my market? Is it a very high-end path to progress? Is there a number of units coming online? Are there other drivers that are going to continue to bring people here that are going to help lessen the blow of potential hard times to my market? It's going to put you in the best position to win. Because as you look at market cycles here, you want to ask yourself, where am I investing? Where am I exposed? If you're in a market today and there's jobs aplenty, right? There's massive employment going on. It's a very diversified employment market. The job market is very strong where I am. The housing supply is completely constrained. There's not a number of units coming online. That's going to put you in a much better place than a place that has tens of thousands of units coming online. We're seeing a deterioration in just the overall occupancy in that market. We're seeing jobs. It's very driven to one employment driver, right? You're going to ask yourself, that market's going to be a lot more exposed. So if you think about yourself in the timing of your investments, it's saying that you're never really going to predict the right time to invest. But if you believe in the market, you believe in the product, you believe in the asset class that you're investing in, then ideally, if you can identify what is your core thesis about investing, then you're going to be able to make good business decisions throughout. Warren Buffett says, you know, when there's blood in the streets, make money, right? Because he's investing in times that others are running away. And that puts him in a good spot to find companies that are undervalued to make those investments. It's the same thing with multifamily real estate, right? You will find that we're typically in a cycle where it's either hard to find deals and easy to find money, or easy to find deals and hard to find money, right? So now we're finding a time where deals are out there more and they're not as competitive because people are shying away from it now. But the money is much more expensive. Lenders are standing on the sideline trying to figure out the market. People who are active investors are a little gun shy in making investments because they don't know where the world's going. But could there be opportunity? Absolutely. So the question is, when should you be an investor? The answer is always. You want to constantly, if you believe in the market, you believe in the product, you believe in your overall investment thesis, that multifamily is your way to go, then you are always an investor. You are just looking at opportunities as the potential opportunity presents itself. So are we investing now? Yes. Were we investing a year ago? Yes. Were we investing 5 years ago? Yes. Will we be investing in 3 or 5 years from now? Yes. However, we are looking at models differently today compared to what we were looking at yesterday. Yes, we are looking at ways to put ourselves in the best position to win in all market cycles. We find today fixed rate debt, long-term debt, having cash flow, having reserves puts us in a very, very, very strong position to weather the storm, but also take advantage of the upside. So as you think about market cycles, think about timing for the investments, 2 things. You're never going to catch the market. That is a recipe for disaster. And if you do try to time the market, you're never going to get involved because you're constantly going to be waiting for that bottom or waiting for that top. And we never have that inherent knowledge to know when that actually happens. So believe in your thesis, support your thesis, find the data that drives your thesis for investment. That's how you're going to make the best decision for you and your investment philosophy each and every day, today and tomorrow. I'm Jason Yarusi of Yarusi Holdings. This is your weekly webinar. Make sure you go down there and hit that follow button. Leave a comment. We'd love to hear your feedback. Are you investing now? If not, why? What are you waiting for? What will be some indicators to get you back into the investment market? Let's do this.